Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your weekend version of this metals market update. And this is for Friday, the 13th of July, Black Friday, if you will, 2018. It's about 2:05, but the markets are basically dead, and this is about where they're going to settle. Remember, the settlement price, and I had somebody write me about this today. The settlement price in the metals is determined at 12:30 p.m. Central Daylight Time. Settlement is not the close. The close comes in at 4 p.m. When the market closes, it could be in gold another $10 lower. It's still going to finish up where it was at 12:30. Got it? When it reopens the next day, in this case it would be Sunday night, if it wanted to go down those 10, you'll see the market drop $10 right away. So that was a question that was asked to me today. And most markets have one of those funny settlements. I don't think it's right. I think the market should all settle just the way they do in stocks. The last trades of the day are the settlement price. It used to be that way in futures, but over the years, the hedgers wanted things different. So what's impacting the market? Well, still what's impacting, the biggest impact on the market is that our Fed is still, if you will, of the mind, 3 rate hikes minimum, maybe 4 this year, whereas our trade partners are questioning should they do any. Even the Brits, which were supposed to in August lift, now some of the governors there are questioning should they lift at this point in time. The question is when they all start lifting again, that is probably at the time that the dollar may actually weaken as their other currencies move. But in this environment, it's strange because the gold doesn't get a bid off of trade wars. The gold doesn't get a bid off of a North Korean situation when it was there, the Iranian situation. And now that short-term interest rates are paying 2.5%, whatever, it's fighting that. It has no story. Simple way to look at it. When you look at the monthly bar chart of gold, you have gone nowhere since 2016. Right here's 2016. Wow, just absolutely nowhere. And I know the story because you're right. Eventually, sideways action like this is either going to prove to be a base or a top. It hasn't broken out either way. That's the one thing to say. I wrote some gold reports this year, and I showed this monthly. I think it was back here, actually, mid-2017 and again 2018, and I showed the Bollinger Band and the upper Bollinger Band and the 100-day average were the problem. I gave people an idea on put strategies if the market broke out on the chart to the downside on this, which it has, but I'm not looking for more than the 1222 level, which is $19 away, the lower Bollinger Band. In a weekly chart, that was monthly. On the weekly chart, you've gone from the most recent high of, on a close of 1350.320 down now to this 1241.30 area. Remember, these are weekly charts. When you go to the weekly bar chart, there's nothing pretty here, but there could be a warning sign. What is it? Well, as you step back, this break low is the most recent low, and this market's at that area. From here, you did launch back upwards. So sometimes markets challenge lows to see what they're going to do. Second part, you're having an outside week down. Whether it's a daily chart or a weekly chart, I have a rule that I use, and the rule is that if you take out the high of an outside week down, the week after or the week after that, it's called a bear trap. And often the market will rally back to the closest of a key moving average or a Bollinger Band if it's under a Bollinger Band. In this case, you don't have the Bollinger Band yet. I'll show them. In this case, all I have is on my swing lines, I have a pattern of a higher, high, higher, lower, high. So I got lower highs, lower lows. That's bearish. That's the definition of a downtrend. in terms of moving averages. You're under the 100-week moving average. You're not even close to the 18-week, right? The last key moving average left the traders look at would be the 200, and that's at 1233.30. So that's one of the areas that we might see the market try to hold. What's the other? Put on the Bollinger Band. That number is 1239. You actually got to 1236.20 today and closed back up and over that. So this is that zone. It means you might see short covering here. It's a number that a lot of analysts will be looking at. Doesn't mean that it's a trend changer. More important to me would be if the market suddenly took out this week's high. When I look at the slow stochastics, which are a momentum index, some people use MACD, relative strength. There's a whole slew of them out there. I like this one, and it is still very much in the bear camp. There's no divergence on this chart. Lower highs, lower lows, under the 18-week average, markets under the 100, and challenging the 200-week average. When you look at the gold-silver ratio, this ratio has just been drifting. Now, typically, when the metal markets get up and go, this ratio doesn't move out in favor of gold. It actually goes the other way. The highest it's recently been is in this 80s area, and it's just sort of gotten here. It's nowhere near the 200-week average. If it crossed that, we'd have, I think, a whole different look to the metal markets. You're not there. When you come to the GLD ETF, okay, so I'm going to look right now what we've got. We have a higher high, and the low of last week, 117.40, you didn't take it out yet. I have this arrow pointing down. It's really not right. I'm guessing, because it's 205, that the market might be able to penetrate that, but otherwise what you'll see me do is I'll reverse that and have a point up over here. I would then say I have a higher high and a lower low. More important and to the point is the market is running the Bollinger Band and trying to stay over it. That number's in the 117.40s. We're at 117.56, and folks, it is as quiet as can be. It's a typical summer day right now. When we come to the GDX, which are the gold miners, they failed and failed pretty miserably with a high this week of 22.93. The upper Bollinger Band, 23.05, the 100-day average, 22.99, and then the market went. Last week's low was 21.98. You've taken it out. You've taken out the high and the low. So, in my magic way of thinking, if this market got over this week's high, next week or the week after, would that be a signal that we're ready to break out? Because it would go hand in hand with my idea that eventually out of sideways action you move, and sometimes there's event. I certainly will have that in the back of my mind, and when I'm looking at gold, I'll remember it. If it continues down, 2161 is the next number. The pattern is a lower low and a higher high. You're not in a trend, but the momentum is down, the bias is down, and you keep failing. If you try to rally this market, you can't break it out to the upside or the downside. In the silver market, this market's trying to break out to the downside. If we take away just this, you can see this is pretty much sideways action that is start consolidating. It tried here to push out to the downside. It's pushing out again this week, as you can see. That was last week. This is this week. And if you can get through 1573, you might call it a breakout to the downside. So you got to be careful. Here, too, if you had a good rally, you have a lot of resistance between 1704, 1701. I'm going to give the bears in control of the market. It's a bear market, downside bias, momentum pointing down. Copper market. Copper is pausing at the 100-week moving average of closes in the green. But it is a market that stayed within that sideways action. Then it came down, and this is the week of June 29th. Last week, pushed on that, tried to hold the 100-week, and I think you'd agree, even though you finished out at 281.30, you didn't drop dramatically this week. Now, with the ZTE Corporation back in business, they've put in the $400 million into escrow. The president has fought hard for that Chinese corporation to work. Is there something brewing that will hear some pushback? If what we all know is that if these tariff wars continue, it will weigh on the economies of the world. If they don't, does it act like a supercharger? In other words, if we don't go forward and people start talking and make deals, What does that do for some of these markets? Because they have been beaten up rather dramatically. You've got to be on the lookout for that. In the platinum market, you're riding the lower Bollinger Band. It's bearish. Lower highs, lower lows, bias down. Momentum refuses to pick up. Palladium market, lower highs, outside week down. Whenever I see that outside week, again, I'll be paying attention to that. First target, if it decides to move lower, 910.55 on the weekly chart. If you take out this week's high, then the 18-week average at 971.74 becomes the target for that. Momentum still pointing down. And in the dollar index is still on the weekly charts, not the daily, very much in an uptrend. Higher lows, higher highs. Doing a nice job, and it had an outside week up. Therefore, with the outside week up, what do I look for? I don't want to see this week's low taken out. If it is, I think two things would happen. I think you'd see your momentum shift on you, and that market quickly get down to the 9200 area, wherever the 18-day average comes in. Does it have to? Obviously not. It's what I would think it would do. I don't know. These are educated guesses, and they're no more than that. But that's how you work with charts. So you put it all together, you mix it up, and you see what you've got. And what I try to do for you is, with my market research, I write about it. So let me tell you what I do with my market research, because it probably helps a lot of people. I start off at 8:30 every morning recording charts. Live charts. I sit at my desk. I'm not in the video. I'm talking. I've got a regular studio set up for it. And you're going to be able to see what I see. And I'm going to go through 40 charts with trade ideas for you and explain them in detail. This really enforces everything that I teach in my charting course. But it's there. From there, I write about the market. So I'm scanning everywhere. FT News, Trade Watch, CNBC, Reuters, Bloomberg. I can go on, and all the private services I have for information that might give you an idea of what the pros are looking for, and you get all that. I also do audio commentary if you want that as well, too. Some people say, you know, Ira, I love the commentary, but I don't need the ideas on trading. So I strip the service down. You can get the commentary only, the written commentary, and away you go. And we've got a lot of people that like that because I make things simple. I think once you see how I write, after doing this 5 decades in this game, you'll understand I write for the trader and giving you an idea. If you want to go on the internet and put all these things together, great, but I'll do it for you very inexpensively. And that's the idea of what I think we can bring to you. But I'd like you to try it. You know, talk is one thing, doing it's another. So for free, what do you got to lose? Give a call and/or go to our website. If you've not tried my stuff, try it. Click up here, away you can go. That'll take, if you click there, you'll see it on the YouTube video. It'll take you to the sign-up sheet. I'm Ira Epstein. I wish you all a great weekend. I will see everybody with any luck. I have a doctor's appointment for something in the afternoon, but I'll come back, so my videos might be late on Monday, but I'll be here. You have a great day. Take care.